Welcome to both of you, gentlemen, and a very good afternoon to you. Sanjeev, I'll take up the first question with you. It's been a good quarter. Overall, this 9 months also, we've seen, collections growing. We've seen overall, occupancies also held at that 28% plus mark. Just want to get a sense of this particular quarter that has gone by, and largely I think this quarter was led by Dhurandhar. But your view in terms of what were the hits and misses this quarter?
No, you're right. Dhurandhar was, of course, the biggest hit, and we all know about it. It's done over 1,000 crores. But in addition to that, I think in our business, there is a rallying of other films as well that has helped us. We had Kantara, which was a big release and a big box office success, which did about 741 crores. We also had an English Avatar, which did about 232 crores. And we had a small movie like Lalo Krishna from Gujarat, which did about 114 crores. So I think that's the beauty of our business in India, that we have so many films from different regions which rally at the box office and become surprise hits. And the accumulation of that is what leads to the kind of attendances that we are seeing. And Q3 typically has been a very strong quarter for us because of the holidays. There's Diwali, there's Christmas. Everybody's in the mood to get out and entertain themselves. Plus, obviously, we had a lot of other strategies in place to draw more and more audiences. And I think the result is there to show now.
That's interesting. Saurabh, just talk to us about the fact that you have several movies that cross that 100 crore mark. So is it simply the sign of the times that this burgeoning creativity suddenly that is taking place, or are more people buying into the idea of going to the cinema halls again?
Yeah, Alex, absolutely. I think this is the highest number of movies in any year that we have seen crossing the 100 crore mark, right? So it also shows an amount of OTT fatigue that's setting in. People are obviously craving to move out. And therefore, we have seen a mix of movies doing well. While there were obviously those franchise hits, but there have been smaller movies like Sanyara, like Lalo in Gujarati, like Mr. Kumar mentioned, which have done well, right? So it shows that people are willing to come out. It's the quality of content that's taking precedence over a lot of other factors. And therefore, we have seen 37 movies crossing 100 crores. We are very excited about the lineup ahead as well. So we have started the year with a bang, with Border crossing 300 crores of box office, right? And the lineup for the rest of the year, we can talk about it, but that also looks absolutely amazing.
That's interesting. Sanjeev, there are two important releases happening. I was just checking the dates. March 19th, two big movies are coming. One is Dhurandhar Part 2 and the other is Toxic from South. Yash, a superstar, is there in that. Overall Q4, how is it looking? Will it sustain that same operational parameters for Q3 as well?
I mean, the lineup is good. We've concluded January with Border 2. February also has some movies like Romeo and a couple of other films that are coming out. March looks strong with these two films, as you mentioned. Q4 is also looking strong, but normally Q4 is slightly muted. But obviously, given these two strong releases, we all could be in for a big surprise.
Saurabh, with regards to selling off of that brand of 4700 BC, just want to get a sense, because after selling this, you will have around 220 odd crores that you'll be getting. I want to understand how will you be utilizing that, because in your press release, you have mentioned that overall, your net debt has gone down significantly and you are on path to become debt free, right? So wanted to understand how will you be, putting to use this 220 odd crores that you'll be getting?
Sure. Mahima, so in the near term, obviously, you rightly mentioned we are at the lowest levels of net debt that we have seen since the two entities merged in March 23. We have reduced net debt by almost 1,060 crores. We are at about 365 crores of net debt as of 31st December. And we closed this transaction where we divested Zia Maze to Marico, and we have received about 227 crores in cash. So this will further reduce the net debt numbers from the level where we are in 31st December, on 31st December. The idea, I think it's the board will take a measured decision of how best this cash can be utilized. At the moment, we are also considering prepaying some of the long-term debt that we have on our books. And I think other priorities relating to capital allocation will be decided and we'll be guided by what the board decides.
Okay, a quick follow-up there, Saurabh. Then before I come to Sanjeev on the plans for 2026, what kind of gearing ratio are you comfortable with at this point?
So we are very comfortable at 1x net debt to EBITDA. We are obviously significantly below that ratio. But see, the idea was that as this business was significantly impacted by pandemic, the board had guided us on certain key priorities. One of the key priority was reduction of leverage on books. The idea was that you should not carry a lot of financial leverage in a business which has a high operating leverage. And therefore, this priority of getting to a negligible net debt figure was decided a couple of years back. We are very happy that we have achieved it before schedule, and I would rest at that.
Okay, fair point. Sanjeev, quickly want to talk about the expectations or plans for 2026. The pipeline seems to be supportive. You've already described what Q4 is going to look like, and seemingly those creative juices are flowing once again and getting some blockbuster hits. But from your perspective, the question is, how do you expand your reach? You're already the largest player in the industry. So therefore, what happens next? Are you going to utilize the available space on the debt side because you've actually delevered, you've sold this asset and you've raised some capital? How is that going to work, and what are the kind of screens that you're adding? What's the strategy there?
No, of course, you're right. I mean, not just the Q4 lineup, even the lineup for the next financial year is very promising. We've got these big films like Ramayan and Love and War and Salman King from Shah Rukh Khan. So there's no dearth of good content, be it Hindi, English, and regional. And we've got about a minimum of 100 to 120 screens already under fit out. These are very value creative screens. We are finding opportunities not just in the main cities, like we just opened 2 more centers in Hyderabad, and we are opening more even in Bombay and Bangalore as we go forward. But we're finding a lot of great opportunities in places like Agra, in Jabalpur. We recently opened in Leh Ladakh, which is doing about 50% occupancy. So India is very underscreened as opposed to the rest of the world. And we're getting some great opportunities around the country in both tier 1, tier 2, and a tier 3 strategy as well, where we're looking at even smaller centers where there is absolutely no cinemas and no retail infrastructure. I think if we manage our growth of cinemas very well with a combination of asset light and FOCO model, where our capex exposure also reduces substantially, the way it has been reduced in the last 2 years, coupled with a great lineup of films, I think these 2 things will really work well hand in hand and give us the kind of results that we all are desiring for.
Saurabh, just one last quick question. Analysts believe that, on this stake sale of 4700 BC, your PAT upgrade could be anywhere in that 15 to 18% range. And this, from my understanding, is that because the business was in the cash burns phase, and ROEs could also improve going forward. Can you give us a perspective or color on that?
Yeah, sure. So I'll talk about FY25 figures for ZMAs. So it had about 100 crores of revenue and about 16, 17 crores of EBITDA loss. And obviously, once this entity goes away, our EBITDA would be accretive by the same number on an annualized basis. And you're correct. It would be both accretive on EBITDA level and on PAT level.
All right.
For the entity.
All right. On that note, gentlemen, thanks so much for taking the time for speaking to NDTV Profit. We appreciate the time you spent with us and wish you all the best for the rest of the financial year.
Thank you so much. Thanks for having us.